Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Tuesday, the 11th of June, just in case you forgot. I might have tried. Good afternoon, everybody. Welcome out. As always, great to see you guys. Hope you had a great day both in and out of the market, as we saw a little bit of selling transpire throughout the course of the trading day. We had a little gap on the open, and really that was it. I mean, we gapped on the open, and really the sellers took control. Nothing major, broadly speaking, but certainly a drift down throughout the course of the trading day, giving us our first loss since last week. So a little bit of bearish activity for the first time in a little while here today. As you look at the heat map, you can kind of see it was a mixed day in the market. We're really getting hit on those defense stocks. We talked about that yesterday. That really impacted the industrial sector as a whole, as XLI did see some pretty decent selling. That's got a little bit of concerning feeling to it, at least for the short term. Over in the industrial sector, pretty much all of those defense companies in the red here today. Some of them pretty dramatically so over the last couple of trading days. It looks like our utility sector shaping up for maybe that pullback opportunity, slowing down a little bit, not quite the turnaround candle just yet, though. Hey, Emily, great to see you. I hope you are well. Hope the little one is doing well as well. That is our good friend Emily over there, and she's got a new little friend who's probably keeping her very awake all the time. So on the earnings side of things, very light. No big names to report coming out before tomorrow's open. About the biggest name we have is Dave & Buster. Dave & Buster's in the small cap space. They are reporting here tonight, but really there's only probably not even 10 companies reporting before the open tomorrow. So again, another light day of earnings. And good afternoon, Patricia, and hello, Micah. Great to see you guys as always. Hope you're doing well. Hope you had a great day trading, as it looks like maybe some of those bearish retracement opportunities are going to develop. Now, one thing that's really jumped out to me today, hey, Fortino, good to see you again, my friend. Had a chance to meet up with Fortino a little earlier today. Had a nice little conversation. It was a lot of fun. The one thing that really is kind of jumping out when we're looking at the indexes is on those 15-minute time frames. Of course, we had our gap up on the open, drifted down, had a little bit of a rally before drifting and closing pretty flat, not really going anywhere of note here today, but it kind of looks like maybe we're on a little bit of a kiss goodbye on the 15-minute chart, where we kind of hit that same resistance level, broke down, came back into that old support zone, and are testing it as resistance. It's a little bit more pronounced in the rut right now. If you look at the rut, I think it really looks that way. Nice clean double top, nice clean breakdown, rally to the old support level, test a new resistance. If we see some selling early, I would expect we're in for at least a pullback. And that's how I'm overall looking at things. I'm not really looking at this as the beginning of the end, so to speak. It may be, but I'm just going to looking at it as a pullback opportunity to the bearish side. Certainly, many of these companies we talked about it yesterday, they sure looked like they needed a pullback, and they got it. Certainly, especially some of the big flyers in the defense sector, they're definitely pulling back. On the S&P 500, I think we want to kind of watch these intraday lows. If these lows give out, I think that might be a little bit of a short-term, at least, shift in momentum into the bearish favor. That's how I'll be looking at it. Looking at it on an hourly chart, we'd kind of be running into the same thing where we weren't able to hold support, taking out that low, giving away all of these short-term hourly averages, which we've held for a week now, right? We never really had that test. And it looks like we are going to get it. Whether we pass it or not, that is the question. we will have to see. I'm looking at it as a pullback opportunity for the most part. We'll see if that is the right way to look at it, though, as time goes on. And good afternoon there, Scott and Hi. Good to see you guys, as always. Hope the market treated you right here today. On the other side of things, if we're looking for some continuation without a pullback, maybe we just do that, right? That's a possibility. I think at this point in time, we need to eclipse these highs that we've set up these last couple of trading days on the S&P for that confirmation that there's a little bit more bullish momentum, maybe enough to take a run at that all-time resistance level there. So I'm going to be keeping an eye on the highs. A little bit of downward movement. I'm going to expect we're going to see some pullback from a broad perspective, though. It certainly has that look and feel to me where it hasn't happened yet, but it's kind of knocking on that door, so to speak. And hey there, good morning, Lloyd. Great to see you as always, my friend. Over on the Dow, really not a whole lot different. I think we're looking at it the same way. If the bulls want to charge back in, I think they need to break this little short-term intraday resistance we've developed over the last couple of trading days to sell me that they've got some more in the tank without a pullback or some sort of consolidation period. We could potentially, having broken the swing high on the Dow, look at that as a support catalyst. That's kind of where my eyes will kind of gravitate towards first. But really, I'm kind of looking at this 9 EMA, we kind of talked about this yesterday, to kind of start catching up and test that as a support catalyst probably a few days from now. So I probably need a little bit of a pullback to get that, but I'm still kind of pulling for that. And hey there, Tina, great to see you as well. Great to see. I was able to talk to Tina today too. I had a fun day. Got to talk to a few of our traders. It was fun. I always enjoy talking trading, as you guys can probably imagine. So going to be watching this old breakout point. That's going to put us right about 26, right about that big round number. As for me, at least, that first short-term level of support. Kind of need to see either a pullback or a break, kind of in this little middle area. I'm a little bit leery to want to be jumping in, at least broadly speaking, to new bullish trading opportunities. NASDAQ, very similar. Held up a little bit. It was the only index that didn't kind of have that potential 15-minute head and shoulders, but we've developed a kiss goodbye pattern, I'm sorry. But we've developed a pretty clear level of support. Have not given that out yet, but if we see some pressure, there's just a little bit of room to the downside. We saw such a strong move to the upside, and I think that is a good show of strength. And that's why I'm overall looking at it as just a natural pullback as opposed to the beginning of the end, or at least the next huge bearish move. But right now, we're kind of right on those lines, pretty much on everything. They're very close to support levels. NASDAQ, same deal. Going to have to break this resistance for that next wave, in my mind, if we don't get that pullback. Now, I'm openly cheering for a pullback. That is what I'm hoping will happen in the market in the next couple of trading days. I think that's going to set up a whole bunch of good new good trades for us late week or into next week. Kind of like I thought coming into this week. I didn't love this week with new setups to the bullish side as a whole because everything was very range up, a little bit extended a little bit, and not maybe the patterns at least I am most comfortable with. There's always trades out there, but my type of patterns weren't floating around in great numbers to close last week out. So 76 here on the NASDAQ, that's going to continue to be that resistance zone in my mind. Again, we could look to 73 as kind of that support zone, but hopefully what will happen is we'll slowly sell into this resistance, letting that 9 EMA catch back up to test that at least as a support catalyst. So, and absolutely, Fortino, I could not agree more. It is my pleasure to get to hang around and talk to traders. That is, I don't think I could have asked for a better gig. So I'm certainly not going to by any means. Over on the rut, still doing that dance in that 15, 20, 25 range. Not really giving us clear signals, but as you kind of saw when we looked at that on the intraday level, it is only a 15-minute chart, so I don't want to get carried away. But if we see continued movement to the downside, and you could argue either taking out the swing low here or the actual low right here, depending on how aggressive you are, could be some sell signals generated on the other end of it if we do rally and push through this resistance that we've established here on the short term. maybe there is a little bit of room. But still, I think the best way to look at it for the most part is a little bit on the weak side, a little bit skewed to the bearish side, but overall still kind of in the neutrality side of things. But if we do start to see some pullback, I do, some of these intraday support levels give out. I do think regardless of what happens, it's probably best to mentally prepare for a little bit of selling in the market. That will kind of trickling down to all sorts of different components within the market. As we move into the different sectors, we held up pretty nicely on the material sector here today. Kind of still hanging around that 58 resistance level, pushing down. We've looked at these guys a lot. This is, one of my favorite areas usually, and certainly was a good area to be involved with last week. Very range up, maybe extended to the upside. A consolidation or a pullback is almost mandatory for me at this point in time in the material sector. Not a lot of movement, not a lot of profit taking yet, at least, but we are right at that resistance level, just shy of $58. Again, broadly speaking, I am hoping for a pullback because that's what I want. We'll give you some interesting bearish retracement opportunities. And of course, we'll take a peek at one of our friends here before the day is done. For the short term, before opening up the door for maybe some nice bullish opportunities a few days from now, or maybe early next week. Support wise, I think at this point we have to look at that 56 as our primary support level on the ETF here. We can also let that 9 EMA kind of work its way to catch back up with us to potentially act as that support catalyst as well. I certainly am very interested in pullback opportunities in the material sector, but at this point, it's probably a next week thing as opposed to a this week thing, unless, you never know how it plays out. But I have a hard time thinking we'll get that pullback in just 3 trading days to get us into the pullback and confirmation in such a short time period. But so many of these companies, the Echo Labs, the APDs, the Air Products, so many of them have shown great strength, great resiliency, in my opinion, and are certainly areas that, when we see a new support level form, I will be interested in as a potential buyer. On the other side of things, and I'm kind of excited about where we find ourselves here in the energy sector, slowing down. We've clearly been kind of slowing down as we've worked into this trend line. We know what most of these stocks look somewhat similar to the ETF, right? Where we have kind of broken down a little bit, showing signs of weakness. There are definitely going to be bearish opportunities out there if we want them potentially developing as early as maybe tomorrow in the energy sector. I think my favorite one still is APA from, I'm not sure if optioned or stock report, but really slowed down. We spent 3 days in a row. We've caught that 20, so we're holding that up. Haven't quite got those signals to get bearish in my mind at least yet, but we've bumped into that same resistance level on the intraday 3 days in a row. Some downward movement could act as a little bit of confirmation, in my opinion. APA doesn't have to be the end all be all. There are going to be plenty of stocks that are kind of in this pullback phase in the energy sector. I still will be leery about going bearish on the midstream types, the KMIs and whatnot of the world. They've shown just relative strength through this entire pullback or sell-off in energy, but I still think that this is a good opportunity from a bearish point of view personally in the energy sector. So I am very interested. We'll see how that one goes, but absolutely an area that I'm finding very appealing. Over in financials, just kind of one of those days, not really telling us a whole lot new in the financial sector. I mean, I think the big story is where's the market? How is it going to respond here? Pull back, consolidate? How do traders respond to that? Within the financial sector, though, a lot of it is the banks. We've talked a lot about them. They've worked their way back into, maybe some sort of neutrality, but this is the one area that's really kind of lagged behind as a whole within the financial sector. And it's, again, we've had an easy last week of trading, right? The bulls have been very much in control. So it's easy to go up when everything's going up. How do we respond as sellers when those, and if, well, they will if, but may not have to be tomorrow, when those signals generate? That's where I am most interested in. Even though I'm not really overly interested in trading the banks necessarily, I still am looking towards the American Expresses and the insurance companies like Chubb and MMC and things like that. But those banks can certainly have an impact on this ETF, whether I am interested in them or not, right? So that is really kind of the story I'm looking for over here in the financials, still kind of clinging on to the top of that old breakout channel. So showing maybe a little bit of relative strength, but again, you go in and kind of scrunch it down to a shorter term level, and we look like, hey, we had a breakout, we tested the breakout point, we're dancing on that. If this gives out, there could be a little bit of profit taking in my mind over in the, pretty much everything, but financial sector would certainly fall into that as well. This one's a tough one on the support side of things, because we don't really have any support until we get all the way down here at $26, which is only $1, but it's a lot of movement on this ETF. So I'll be kind of looking for these averages to try to act as support catalysts. Pullback in financial in some of those nice upward trending movers could be very appealing in my mind. But again, that's probably now turning into an early next week thing as opposed to a this week thing. Over in industrials, really saw a lot of weakness. We talked about this yesterday. We saw the UTX Raytheon merger news kind of get some cold water thrown on it by the president yesterday. That really extended. And while UTX kind of maybe looking the weakest of the bunch here today, after clearly breaking support, clearly breaking the 200-day moving average, we have a little bit of support down here in this 120 range. But beyond that, there's some room. It does give me a little bit of concern, and that's definitely worked its way into some of our top performers. These guys certainly weren't some of the top performers in the defense space lately, but the LL, or the 3Ls, the level 3, really deep pullback. Now some simmering down, some slowing momentum. I'm really excited about this as a pullback, this space, the Harris's, the LLL, the LMT, pick your favorite, still holding the upward trend. I think it's presenting us for some really interesting opportunities, just not yet. That's some pretty steep selling. Volume's been pretty high. It's definitely having an impact on the sector as a whole. And that concerns me in the short term for the sector. These guys have been a big part of the strength of the industrial sector. And so this is going to be an interesting one to watch over the next couple of trading days. I'm going to proceed with quite a bit of caution in the industrial sector in the next couple of days, anticipating some really exciting pullback opportunities to be talking about on Friday for the scouting report meeting if this selling slows down. That is the key component. Really didn't do much slowing down here today in this space. You also saw some of the waste management companies and waste management in particular kind of in that pullback phase as well. A lot of the strength in industrials really has been in defense and the waste management companies. So I expect that a little bit more selling in there. If those defense companies kind of start slowing down, establishing some support levels, I think not only is it going to open up the door for some opportunities on those companies, but potentially on the sector as a whole. At this point, again, we can look to these short-term moving averages as support catalysts, but we don't really have a lot until we really work down to the swing low. We do have some history at 73 we can keep an eye on. So I think right now we're just waiting for that support level, broadly speaking, to develop. Where it is right now, quite honestly, your guess is about as good as mine with this ETF right now. So I think we have to be careful with the speed that we're seeing those defense companies selling off. That certainly can have a trickle-down effect, down almost 1% today, and not a huge number, but relative to everything else, it was one of the big losers in the market here today. Over in tech, down, but holding that 76 breakout resistance zone of days gone by. So a little bit of a positive. We've talked about the semiconductors and how they really can help out or hurt this sector. Many of these things, the Microsofts and whatnot, they've been performing really well, but they've had, they're pretty darn extended from the last week of trading, right? We hit a new 52-week high today on Microsoft, but then we sold off of that high. A lot of things are looking like that. Although our old friends in Cisco working right up into that old resistance level. So if tech wants to stay strong, this is an interesting chart in my opinion. If tech isn't going to pull back or does go into a consolidation 3 or 4 days here and then pushing through that resistance could be very, very pretty technical setup potentially. But it really kind of comes down to the semis. That's really gonna, in my opinion, have an impact on the tech sector as a whole. We've seen a little bit of a bounce back, on the NVIDIAs, on the applied materials. So many of them have had a good fight back, but have not really reclaimed the upward trends that some of the other companies within tech have developed. So that's going to be the interesting thing to watch in the days to come. For me, at least, in the technology sector, I'm still a little skeptical. I mean, I trust my eyes and going with it, but I am still preferring other areas to tech right now, even though I recognize that, yeah, we've held our breakout. We're still showing some overall strength. Again, much like the broad market, much like the NASDAQ, very short-term time frame, starting to see a little bit of a turnover. And generally, I'm not going to be overly impressed by that. But with this last week of trading, I mean, everything was above those short-term. Even you can see even the 15-minute moving averages, we lived above. So we were just a ton of strength. We never had an opportunity to see what happens when the bears, or at least the sellers, get technical signals. And so that's why I think this is such an important thing to watch right now. Something we haven't seen for a while now, right? This was basically a huge run up in not only tech, but most areas within the market. So on the resistance side of things, we do have room to run, but I still think that the pullback presents the much better opportunity than the continuation of the run for new things. For things that we're in right now, hey, we're in no rush for a pullback, right? So that's usually how that goes. Holding it pretty nicely over in the staples, but again, pretty range up to the upside, showing great strength. There's no two ways about that. An area that I think we continue to like. There are certain things like Church and Dwight that are kind of setting up already, a little bit of a pullback developing. These guys certainly weren't the only company within the staples that kind of jumped out for a pullback opportunity. So we're seeing a little bit of pullback opportunities potentially as early as tomorrow if we see money shift back in to some of these staple companies. I continue to like this area. I think it continues to show quite a bit of strength. The biggest knock on it is the big knock on the market as a whole. It really feels to me like we need a pullback, or it's just keep running with things that we have and be satisfied with that. And you look at the ETF here, and we see much of the same thing that we're seeing from a broad market perspective on the staple sector. So an area I think we still continue to like, still a lot of strength, still holding everything. So good reason to believe that the strength is still there in my mind. But for a whole bunch of new trades, I think the pullback is almost what we need to see. Speaking of pullbacks, getting that pullback a little bit closer to maybe time to do something here in the utility sector. Coming back to the old breakout point, you can kind of see that's kind of where we caught our intraday support. Still not that turnaround candle that I want to see, at least just yet. We at very least kind of need to start to see some upward movement and kind of recapture these shorter term moving averages, right? Get that upward movement, still yet to cross or close above that falling 9-hourly EMA. But one thing I did notice in the utilities today, and it's not a huge deal, but it's the first time in the entire pullback that we were actually able to close back above those short-term 15-minute moving averages. So it looks like this pullback is developing. I think broadly speaking, at least, probably need that turnaround candle tomorrow. But the price is certainly interesting. This old resistance zone right between the 9 and the 20, certainly an area that I think as we move into the next couple of days, if we're looking for pullbacks, could be an interesting area for us. Assuming that we do see some upward movement, really we don't have a lot of resistance. As you guys know, on the ETF, this is the all-time high, and on so many companies within this space, they're dealing with much of the same thing. So you've got pullbacks on Southern that's very much looking like the ETF, AEP looking very similar to the ETF. I don't think it was XCL. Yep, XCL looking very similar. So there's going to be some pullback opportunities in the days to come within the utility sector, I believe, if that's something that is interesting to us. I still think a little bit of upward movement for confirmation is in order, though, personally. Over in healthcare, not a whole lot to say about the ETF, a little more movement, just like the market. We were able to see that nice little pop on the open and then the drift all throughout the rest of the day. Not terribly surprising that that's the case. Probably the most interesting chart in healthcare today is our old friends at Eli Lilly, who broke down somewhere between talking to Fortino and Tina today. So we've had them on our K-trade list these last couple of days, cleanly breaking down below that support level here today. Very interested in the way this develops in the next couple of trading days after, in my opinion at least, giving us those sell signals via the K-trade on the bottom side. Even though just late last week it looked like it could happen as soon as tomorrow. And that's all right, Fortino. No worries. No worries. That's why we have automated orders, my friend. So no problem at all. It was a great surprise. Got to talk to you, and then, oh goodness, there we go. What happened here? So that was probably the most interesting chart, in my opinion, today in the healthcare sector. We've really established, let me move my head here and get rid of these lines. We've really established a clean level of support. We had some, not great news on the trial front yesterday, so kind of got this party started, broke support, a little bit of follow through here today. There really isn't a lot of support until we get to that 105 range, at least from a technical point of view. I thought that was a really interesting looking chart. And if we are going to see some pullback within the healthcare space, could be an area that is appealing to me, at least, as we're moving forward. If we're looking at the actual ETF, I think we're kind of looking at this old breakout point as that first level. But again, broadly speaking, much like everything else, kind of want to see these short-term averages work into these, work into the pullback to test that as a support catalyst. So can kind of look at this old breakout point here, around this 90.75 range, but probably don't think that that's where I would become a bear in healthcare overall. I would probably need to see a little bit more than that. Pretty decent looking reversal characteristics, in my opinion, on this chart. Again, just like the market, it feels to me like if for that next really good opportunity, we need a pullback. And the same story over in the discretionary sector as well, hanging right at that old resistance zone in that 118 range, working into it, using that as the intraday high here today. Really good bounce back here. There's no doubt about that, but very, extended over, at least a little extended to the upside in my mind. So pullback's kind of what I wanted to see. We had McDonald's, of course, yesterday had that pretty steep selling right back into that breakout point. Saw some decent upward movement here today, still closing above that 9 EMA. Breached it yesterday, but was able to close above it. So still an area I think we want to be careful with. We don't want to go crazy one way or another. Let the individual charts kind of do the talking. You got a McDonald's. Now we've got a pretty serious challenge here on Nike, running back into that 50-period moving average. I don't know the future, but I know the last time that we ran into that 50-period moving average, it was a good idea to sell it. If sell it or not, probably not buying it right here, right? So there's going to be some challenges within some of these areas, but many of them are still showing some decent strength too. So much like it's been lately, we really want to kind of focus, I think, on the individual components within this sector, more so than saying, but the sector was strong, or the sector had an intraday sell signal, or something along those lines. Much like the utility sector, getting that little pullback developing over in the REITs here, kind of a little bit of slowing down. Would like to see maybe a little bit more, but if we scrunch this into a shorter time period, you could make a case that we've got a little bit of a double bottom type of a pattern, little bit of upward movement could be enough to potentially get some aggressive money into this ETF from a technical point of view on the short term at least. Continues to be an overall strong area. I think what we're probably cheering for the most is a little bit more of a pullback. The cheaper we can get these REITs, the better, right? Because our dividend yield is better. The less that we pay, and so a little more of a pullback might not be a bad thing for us dividend lovers out there. But starting to feel like this is wanting that pullback to me. The trend remains very strong, hitting all-time highs. Hard to make a bearish case against the REITs right now, in my opinion. Just don't know. I think maybe much like utilities, could use at least one more day so we could get that signal candlestick. But definitely, if I'm interested in REITs, it's time to kind of start shopping around a little bit, see what might be looking like worth putting onto the watch list. And lastly, over in communication services, much like the market, one of those days, gap open, drift to the downside. Of course, the big story, as always, in this sector is going to be Facebook and Google. Facebook running all the way into that 20, into that old support level. Very interesting placement if you are a potential bear on Facebook. Much like the market, we've kind of had that nice run. We've now ran into a challenge. We haven't seen that momentum shift yet, but we did see that big old doji candlestick develop here today, some downward movement, and kind of see some of these short-term averages flip, see some of those intraday traders trading Facebook bearish, because hey, let's face it, up until today, they've been trading it bullish very effectively these last, since we basically tanked on Monday of last week. So definitely an area I think is worth keeping an eye on from a bearish retracement perspective. The price is interesting, if nothing else. We've got some price history here in this 175 range, a little bit of a doji, still making higher highs and higher lows. So again, I don't think the signal candlestick is there here today. At the very least, need to kind of see that momentum go into tomorrow's open. But price-wise, risk to reward wise could be an interesting area in my mind. Certainly something I'll be keeping an eye on tomorrow morning. In my watch list, for whatever that's worth to you. And then over on Google, the other big component, and if you aren't too familiar with these ETFs, on XLC, the Communication Services ETF, Facebook and both shares of Google's are very heavily weighted into it. So it's very much so important, I think, to when you're looking and thinking about this ETF, to really be thinking about Google and Facebook, because they have such a major impact on that ETF. Google's certainly looking a little like a bearish retracement as well. Don't really think it looks like a great bearish retracement, but that's in the eye of the beholder. Certainly don't feel like it's showing a lot of strength, a little bit of selling here today. So broadly speaking, this continues to be an area that I'm not a huge fan of, and I'm certainly more on the bearish side, and certainly more looking to the bearish side within the communication services. Still seeing some weird back and forth craziness on Verizon. We're seeing Comcast. I'm sorry. You're seeing Comcast kind of working back into this support level. If that breaks out, I was thinking about Comcast here today, and they're not a crazy mover or anything like that, but we don't really have a lot of price history till we get into this 39. I mean, we could argue that we have a little bit of old resistance here, and I would agree with that, but not a lot of history. If that support gives out after breaking the 50, nothing else showing a little bit of weakness, if not necessarily a new trading opportunity. Disney kind of falling back after kind of breaking out last week, pulling back a little bit. I don't think that's necessarily a terrible thing, but certainly not a ton of strength here today. Netflix just can't seem to get right. No matter what it tries, it spends its life being neutral nowadays, apparently. So with not a whole lot of faith behind it. So an area I think we still have to be careful with. I think we talked DA yesterday, but we'll take a quick peek at it for those of you who weren't able to join us. I think it's about time to put these guys into that K trade list as well. We were developing a pretty clear top, pretty clear bottom, and eventually we will break one way or another. I'm always careful. I like the way the chart looks for that, but as you guys know, I'm a grumpy gamer, and so I always assume the worst about EA, and so I always have to be careful with that stock. But I think on the chart wise, I think it belongs on at least my K trade list. So looks like with a little downward movement, we could start to be getting into some intraday sell signals. That's really what I'm most interested in seeing. That needs to happen. That's going to happen, whether it's tomorrow or not. It is going to happen in the not terribly distant future. What I'm really interested in seeing is, what do the other traders do, right? I expect the day traders to go to the bearish side when they start to generate those bearish signals on those short-term time frames. Do the bulls who have picked up some good profits this past week, do they just hit the road running like maniacs and putting a bunch more pressure onto the selling side, or is it a little more gradual? Okay, I'll get out of this, but I'm going to buy me some Church and Dwight, or I'm going to buy me some McDonald's, or buy me one of these utility companies. I'm really interested in seeing what that group of money does when we see these sell signals generate on the intraday with where we are in the charts. I mean, with some downward movement and not a whole lot, in my opinion, at least, they're going to be starting to generate. So I'm excited to see what tomorrow holds for us for the market, because I think we need this pullback. I know I do, because I'm just not finding the great setups. Still waiting for retracements. There's always something. There's always a lily out there finally willing to break a support level you're looking for, right? But broadly, just not been great setups in my opinion so far this week. As we move into the volatility index, not a whole lot to see here. Just another day. I don't trust that, we're out of news-driven responses. We just haven't had any. So let's see some news, and then let's see us not freak out one way or the other. Then we can talk. Right now, dip down a little bit, but again, right or wrong, I'm not trusting that for much. Still barely hanging on over in the dollar, still above that 200-period moving average. If we're looking at this dollar pullback as a potential opportunity, we probably wanted something like this to develop. We probably want a floor and then some upward movement, not just a giant green candle, right? Because those are always, if you're waiting for confirmation, at least those are a little tougher. That's what happened back here, right? And do I still try to trade into it or not? Still fighting that battle. This is an important battle in my mind. If we do lose this fight on the dollar, I expect working into 96, into potentially, into the low 95s as kind of that next step. We haven't lost that fight yet. Until we've lost it, I'll assume that the bulls will eventually step in and buy off of that 200. But I think we are in a very important point on the dollar. There's a little bit of room to drift down if that support zone gives out. On the other side of things, we've got lots of little things, the falling 9, the old $97 resistance zone that we have, certainly the 97.60 breakout point. The good signal in my mind is still the signal that I've been waiting for quite some time, right? And that is the close on the weekly chart above these highs. We've talked a lot about it. That's what I need to see. And I believe that if and when we get that, maybe these pullback traders will get me back into that point. That is a pretty clean signal. I thought for sure a couple of weeks ago it was going to happen, but it hasn't happened till it's happened, right? I want to see the weekly close above this body of these candles here before I do much from a bullish point of view. But depending on how we develop over here, maybe there is something that we could talk about. If we do go into a little consolidation in the next, over the next several trading days with some upward movement early next week, maybe this pullback could be intriguing. I don't believe that's what will happen though, but we can always ask, right? Had a nice bounce back here in gold today, coming right off of that 1325 zone. Pulled back all the way into it today, but that also happened to line up with right where that 200 hourly average was, which can be a big deal in my experience on the commodities. Gold's kind of an interesting spot where we're developing into, those of you who know Coach Mark, a nice little pinch on that hourly chart. We've got that rising 200 and the falling 50 kind of stuck in a pinch. Sooner or later, we're going to break one way or the other. It's kind of its own version of a K trade, if you will. Certainly, I am looking to the gold on the bullish side of things. So seeing some upward movement and some signals to the upside could be intriguing to me. But if I were looking to the downside, I would make the same case. If we break this 200, break this support level, we moved quickly. There's not a lot of support that had an opportunity to develop back until we get into this 1312 range, which we've seen some history there before, right? In that 1310, 1312 range. So in an interesting spot, little developing pinch here. Hopefully we're in this pinch for maybe one more day and let this 50 fall a little bit more, let this 200 rise a little bit more, and then push out of it, on Thursday. And that might be an interesting signal. I think for me, this is certainly something I'm interested in. We've talked a little bit about it, a little bit of a pullback. Now we could also just be a little, more simple and just say, you know what, we've, created these lower highs, lower lows along the way. But if I'm able to take out today's high tomorrow type stuff, that would be a little bit of a bullish signal as well, in my opinion. Hopefully one more day in that little pinch. I like those pinches. Don't tell Coach Mark I told you this, but I'm the one who coined the name pinch in my kitchen. He'll corroborate it. So, but that is another story for another day. Over in silver, holding up at that support level, but as we've talked a lot lately The bullish argument in the short term, in my mind, the gold chart is a lot stronger. I think there's a lot stronger argument technically on gold right now than on silver. Today, holding support is a step, and just because I feel that way doesn't mean anybody else has to. We see some upward movement. We could argue it, but for me, it's got to reclaim and cleanly reclaim that $15 mark before I'm all that interested. We're developing a little bit of a floor. If we spend a little bit more time developing this little 2-day intraday floor we found, a break to the downside could be a little bit of a signal for the bears as well. Maybe 1 or 2 more days, but that would give us, if that floor gives out. We've also given out those short-term moving averages on the daily chart. And on the weekly chart, we've already failed at them. We're kind of smashing into that 50 weekly at this point in time. So still not a great trading environment. But if we build a floor, it's one of those things. If we build a floor in the next few days, potentially a breakdown candidate for me, but it really needs to spend a few days building that floor for that to be the case. Little bit of a relief rally type of day over in natural gas. Of course, the big challenge is going to be that breakdown point, right? I think when you're looking at natural gas right now, and I have to move my own head. I know my head's probably not in the same place on my screen it is on yours, but the big one is this old zone of support. We've got a ton of history here, certainly a lot of downward movement nonstop last week after that had given out. That's the big line in the sand right now. The very least, as long as we're below that, I think you have to maintain a bearish outlook over in natural gas. Even breaking above that, I don't think that's a bullish signal. I just think it's less bearish. As long as we're holding that breakdown point, could ultimately little more upward movement into a doji or something like that later in the week could present a really good bear pullback opportunity. If we actually get it, and again, this might be asking a lot, but if we get a nice clean bearish retracement into that old breakdown point, followed by some downward movement, that could be a really good trade setup in my mind on natural gas. So I don't really expect it to be the way it plays out, but that doesn't mean we can't hope, right? That doesn't mean it hurts to ask. And lastly, over in crude, a little more downward movement here today. Not a particularly inspiring candlestick. Short term, if we look at these guys, we're already seeing that turnover, right? Where we've had that little rally. Now all of a sudden we're starting to show some weakness. We're kind of hanging on this, as you can kind of see here, kind of a last level of support here at about $53. If this support gives out, I think you could make a very strong case that this is a bearish retracement opportunity. I do think if that's the argument that we're making, we have to respect that $50 zone. That is just such a big number. We've seen some price action off of that just last week. So assuming that, if I am looking at this as a bearish retracement, I think you have to respect that $50 level. As opposed to, I don't think you can have I think your first target has to be at that zone. I don't think your first target can be at 47.50. Let me just put it that way. That could be a second target, right? The cool thing about the oil, if we continue to sell in oil, there's not a lot of support, that this old zone that we've, tested before, big round number, bounced off of last week. Beyond that, we've got a lot of empty space with no buy signals as of yet. If I'm looking at it from the bullish point of view, I need this retracement. I need somebody to start selling into it so I can work down and test this support zone again, or create that higher level of support and then break that resistance, right? Kind of like, well, not a great example back through here, but it does kind of work. Big drop, rallied up, started to drift down from looked like some people were saying, yep, there's our bearish retracement, and then broke above that resistance a couple candles later, giving him those higher highs and higher lows. So if you are on the bullish side of things, I know some people are not necessarily bullish, but are looking for bullish opportunities in crude. I think that's what you need to see. Create that higher low or retest that 50 zone. And I think we have to call it a zone right now. And then some upward movement to take out whatever ultimately right now it looks like our swing high from yesterday, but something new could develop between here and there. That's probably the bull signal that I would be looking for if I'm looking at it from a bullish side. Resistance, as long as we're looking at this high, that's where I'm going to be. As long as we're high, that's going to put us right below 55. Right now, that is resistance. Anything below that, I say you can't buy. You don't have to listen to me by any stretch of the imagination, but I say you can't buy crude below 55 with the chart currently as it stands. So that's where we find ourselves, ladies and gentlemen. I think probably the best way to approach this market is have some of those bearish candidates ready. Some of them are already hit the entry points. You know, Lilly already in. WWE from the options report, not too far away from its entry price. Certainly not the only one, just a couple that I'm following. There are lots of bearish retracements in energy. You don't have to like any or all of them by any means, but I think having some bearish candidates, if we see some of these intraday signals trigger, I don't know how it'll play out, but I think we should assume that there might be a little bit of selling if that is the case. At least that is how I will be looking into it. I certainly am still open to upward moving stocks. You know, if the individual chart, if I see some good signals tomorrow on utilities or, on something that looks like a Church and Dwight, if something can develop, can't be really tomorrow, I don't think, but in some of those nice upward movers like waste management, like the waste or the defense companies, I think we're still open to both sides. I think right now, though, from a looking perspective, at least, maybe not even from an action perspective, but for me, from looking for opportunities, I think for me, it's kind of skewed to the bearish side at this point in time. Not really a long-term bear. I don't really look at where we're at in the market as being where it has to be the end, but I do believe we need a pullback, starting to feel like we're going to get it as those intraday charts slowly starting to turn around. Tomorrow's open could really impact them one way or another. A gap up could kind of reset it. If we don't gap up and see a little bit of downward movement, maybe we have a little bit of a pullback in the market. So, ladies and gentlemen, that is where we find ourselves, and that will do it for the market recap here today. But as always, guys, it is certainly my pleasure. I appreciate everybody's time. Thank you for hanging out with me, going over the daily routine. It always helps me go to the next step, and so appreciate you guys hanging in there with me. As always, we've got the coaches show tonight for our pro members. Should be a lot of fun, talking a little step in there. So guys, enjoy that. Of course, if you're not a pro member, we always invite you to get over to Tackle Trading. We'll get you hooked up with a free trial. You can come see what it is all about. You guys probably gonna have a good time in that coaches show here tonight, I hope, and would expect. If you are new around here, of course, invite you to join the channel and hit that notification bell. We've always got things going on over on our YouTube channel, not just live streams. We've got the halftime report. We've got tutorials. We've got how-tos. We're busy when it comes to YouTube, so certainly invite you to join us over here. Of course, you guys know me. I'm the Twitter guy, so be sure to join us over at Tackle Trading on Twitter. You can, of course, find me at FrankMartin23 on Twitter as well. And lastly, if you haven't had a chance to get to the Instagram, be sure to do it. Tackle's doing some really cool stuff over on their Instagram page. It's even cool enough for me to visit Instagram from time to time, and that is not what I normally do with my days. So I would certainly encourage you to check that out if you haven't had a chance to do so. And of course, you guys are very welcome. Thank you so much for your time. You guys have a great afternoon. Enjoy the coaches show here tonight. Should be interesting. We might be set up for an interesting second half of the week if we see a little bit of selling. I'm certainly looking at it from that perspective at least. And if it doesn't want to sell, that's okay. That's okay. Consolidation would be okay too. I just think no more run to the upside. Broadly speaking, we need a breather for that next swing, whether it's break to the upside or swing to the downside. Either way, I am fine. Just don't want it to just keep going, inching straight up at this point. So you're very welcome, Micah, Scott, Adi, Patricia, Portino. Always, guys, it's my pleasure. Thank you for joining me. Those of you who catch the market recap later in the day, thank you for joining us as well. Certainly appreciate you guys as well. So get out of here, guys. Guys, enjoy the rest of your Tuesday. Have a good time in the coaches show here tonight. I will see you same time, same channel here tomorrow for another market recap. Thanks, everybody. Have a great afternoon and a great Tuesday. Bye now.